Hey guys, Scrub here. Today we're going to drop a quick video about what a VWAP is and how to add it into your trading arsenal for better trades. Before I start, if you learned something from this video, please do me a really quick favor and hit that sub button and drop a like. It would be awesome and super appreciated. Alrighty, so let's break down what an actual VWAP is. So a VWAP is a volume weighted average price. So what that means is it's an important tool that traders use to try to track the average price of a security over a certain period of time throughout a trading day. Pro tip, this is a day trading and a scalping strategy only. So everything on the VWAP sets daily, okay? So it calculates the price based on all the orders for that specific trading day, and it helps gauge what price buyers and sellers are actually really trading at. So there's a couple of ways to how to actually trade the VWAP. So pretty much to dumb it down super quickly is if the price action is above the VWAP, it is considered bullish. If the price action is below the VWAP line, it is considered bearish. And then there's a couple things you can look for, what is known as a VWAP bounce, VWAP rejection, and VWAP cross. So let me kind of break that down real quick. Actual VWAP bounce it's pretty much sellers are attempting to bring the price action below the VWAP and try to make it bearish, but buyers are sitting right there at that key level of the VWAP and bounce really hard off of it. As you can kind of see in this example right here, the sellers tried a little bit and they try to bring the price action below the VWAP, signaling, potentially a bearish shift. But we actually ended up making a really nice reversal candlestick off of that and then kind of just rallying the rest of the day a couple points. So if you saw this, you could have got in long here and your risk to reward ratio would have been heavily in your favor. You pretty much would risk underneath the VWAP. So like if the price action comes back below the VWAP, that's in a sense your stop loss. So you're not really risking very much taking that type of trade for a bounce. So that's one example of how to use the VWAP. A different type of example would be a VWAP rejection. So basically what this one means is buyers try to rally the price back up above the VWAP and try to become bullish, but the sellers were strong and waiting at that level. So notice the hard drop and rejection right at that level. We tried and then we just pretty much sold right on off for the rest of the day, and then the price action followed very nicely the rest of the day right below the VWAP. So price action was below the VWAP, so the entire day was bearish. And if you saw something like this, same thing here, your risk to reward would have been great. You could have entered puts basically right at this rejection, and your stop loss is pretty much right above this VWAP line. So you're not really risking very much. And if you looked and took this trade, you would have been rewarded very heavily. So that's a different example of how to use VWAP. So the last example that we have is what is known as a VWAP cross. Now this can be bullish or bearish. In this case, we're just talking about a bullish cross. So we were pretty much flat and in a sense just fighting over price action for probably about an hour right here, right? So then at first we tried to break above it, we failed, but then we still stayed right near the VWAP. So it wasn't a hard rejection. Then the next 15-minute candle, we actually broke through the VWAP line. And then you can kind of see that, notice the momentum with that breaking. And the buyer stepped in and pretty much set the tone for the rest of the day. And you can kind of see here, as soon as we broke through that VWAP line with volume, so it was a higher volume than the last couple candles, and we made a nice little momentum candle, pretty much, engulfing the rest of the price action here. We set the tone for the rest of the day. And same thing here, you could have had a really nice risk reward trade. Your stop loss is in a sense right underneath where my arrow is. So it's not really, you're risking about 20, 30 cents. And in this trade, you would have potentially made quite a bit of money. I'm not going to say you're going to sell right at the top, but even if you took it to this resistance right here, you're in a sense risking 20, 30 cents to make an entire dollar, right? So these risk rewards are heavily in your favor, and you can really add pretty much a leg up on your competition when just simply using a VWAP and adding it to your trading arsenal. Using VWAP for scalping and day trading is awesome. And then you can use it for different situations, whether it be VWAP crosses, bullish or bearish. It could be VWAP rejections, and it can also be VWAP bounces. So I hope this little quick video helped and pretty much broke down the VWAP for you guys and it made some sense. If you have any questions whatsoever, please feel free to drop a comment below. I appreciate everyone for listening, and I thank you again, and I'll see you guys later for the next video.